Can you imagine one Bitcoin at $250,000? At first it sounds crazy, right? But here's the twist. The math is already in motion. Hi, I'm Mai. Welcome to Bitcoin Basics. Here, I break down Bitcoin and crypto in a way that is simple, clear, and actually useful for your everyday decisions.
Just a few months ago, Wall Street was still acting like Bitcoin was something to look into. Now, they're pushing each other out of the way to grab the same 21 million coins the rest of us are fighting for. BlackRock's already piled in with billions. Exchange balances are the lowest since 2018, and Europe just gave Bitcoin its clearest green light ever. When you might put all of that together, the question isn't, will Bitcoin hit 250K? It's really, how soon do we get there? Think about this for a second. Every pension fund, retirement account, and endowment suddenly realizing they need Bitcoin. That's not hype. That's happening right now. The new spot Bitcoin ETFs? They're sucking in billions. And this isn't just retail traders. This is retirement money, the boring kind that sits there for decades. Fidelity even says almost half of US institutions now hold crypto in some form. And when one ETF can grab thousands of coins in a week, coins that go straight into cold storage, you get a supply squeeze that's brutal. If you remember gold's rally after ETFs launched in 2004, that went 5x in just a few years. Bitcoin's setup? Even tighter, because supply is capped. Now let's talk about the halving. April quietly cut daily Bitcoin rewards from 900 to 450 coins. That's like someone walked into an exchange and erased half the listings overnight. At the same time, 70% of Bitcoin hasn't moved in over a year. Holders are basically playing keep away. And when new supply is shrinking while holders refuse to sell, what happens? Prices explode. This is exactly what happened after the 2012 and 2016 halvings. If you take the conservative end of those rallies and apply it to today's cycle bottom, you get numbers that land right in that 250K zone. History doesn't copy itself perfectly, but it does rhyme. Remember when regulators treated Bitcoin like a shady cousin nobody wanted to talk about? That era is over. Europe's MiCA rules went live at the end of 24. And for the first time, Bitcoin is being treated like a normal financial asset. Clear rules, clear taxes, and legit audits. Meanwhile, Hong Kong and the UAE are dangling zero tax incentives to pull in big crypto players. Even in the US, where things move at snail speed, approval of spot ETFs was basically Washington saying, okay, Bitcoin is real. And look at MicroStrategy. They already hold a huge chunk of Bitcoin and keep raising hundreds of millions more to double down. For CFOs at other companies, not touching Bitcoin is starting to look like a career risk.
If you found this video helpful, make sure to hit subscribe and turn on the notification bell. That's the best way to stay updated with the latest insights on Bitcoin and the crypto market.
Zoom out for a second. The dollar index is slipping, gold is pushing new highs, and trillions of dollars in bonds are still negative when you factor in inflation. Bitcoin is acting like gold on espresso. Every time real yields fall, Bitcoin gets a shot of rocket fuel. And it's not just individuals anymore. Tiny countries are starting to buy and add Bitcoin to their treasuries. El Salvador is just the loudest example. Add to that, Bitcoin's inflation rate is now lower than gold's. That changes the narrative from speculation to reserve asset. Suddenly, Bitcoin isn't some wild gamble. It's looking like the scarcest hedge on the planet. Now, let's be real. Could we see a sharp pullback? Definitely. Arthur Hayes even warns about a liquidity crunch that could drag Bitcoin down before it runs higher. A US mining ban or another China-style exchange crackdown could slam the market 30% overnight. But here's the difference this time. The downside is cushioned. Spot ETFs are constantly buying, and when the market dips, giants like BlackRock step in and scoop up coins like it's a clearance sale. That means volatility is still here, but each swing keeps raising the floor higher and higher. So add it up. Institutions are locked in, supply is shrinking, regulators are clearing the path, and macro tailwinds are blowing full force. Conservative forecasts point to 200K, but when you run the models that include ETF demand and the halving cycle, 250K isn't wishful thinking. It's the logical outcome. The real question isn't if, it's whether you're positioned before the next weekly candle turns green. Drop your own price target in the comments.
Thank you for watching until the end. Drop your Bitcoin price prediction in the comments below. And remember, this journey is only just beginning. See you in the next video.